Hello everyone, welcome back. I think over the weekend, Pioneer Residences just sold over 92% of its units, with actually prices crossing more than 2,700 per square foot. So it is very interesting because in the current climate, we are seeing all the wars going on. Our oil prices are going up and there's a lot of uncertainty in the market. However, Pioneer Residence still sold at 92%. And is it because buyers are already comfortable paying these prices in Tampines? And what happens when the next project launches? So will developers actually price the upcoming projects lower? Or do they take this as a market signaling and push prices even higher? Today, we are going to look at a project with the lowest land bid in 2026. This is Tengah Garden Residences. The key question is this: would the lower cost mean better value for consumers today? As always, we will break this down from a strategic point of view. First, what you need to know about a project. Second, whether buying into a new township like Tengah actually gives you the advantage. Third, how much of Tengah's future growth is already priced in. And finally, whether this is a buy, a wait, or something you should avoid altogether. So, Tengah Gardens sits beside Hongkar MRT. So, this is the land plot. It is a direct link from the development to the MRT. And in terms of the information that we have currently, this developer is led by Hong Leong, together with CSE Land Group as well as Guaco Land. The site area is approximately 25,458 square meters, with a plot ratio of 4.52 and a total of 863 residential units, with commercial at the first story. The commercial space is approximately 3,000 square meters, which translates to roughly 40 to 50 retail units, where you're likely getting a decent mix of food and beverages, groceries and daily conveniences, hence reducing the reliance on external amenities, especially in a developing township like Tengah. In terms of the site plan, what we notice is mainly north-south orientation, so northeast-southwest kind of orientation. For the units that are facing outwards, just take note that this will actually face towards a hospital in the future. Whether it's a community or not, we do not know yet, but that is upcoming in the future. Developer has placed the bigger floor plates or the premium units towards the waterfront living. So expect premiums for these units to be higher. And if you are looking for a safer entry, do consider the ones that are actually inner facing. First, to avoid the hospital side, and also not needing to pay a premium for the units that are facing the waterfront view. In terms of the unit mix, there is a good mixture of 1 to 4 bedrooms with only 6 units of 1 bedroom. What we are seeing is that developer is placing an emphasis on a more calibrated approach, focused on keeping the size practicable and the overall quantum affordable. So while we are still awaiting the official floor plans, what we have observed from the show flat is that the layouts are fairly typical. One key complaint would be actually the common bedroom sizes, which are 8 square meter, compared to the market trending where other developers are keeping the bedrooms at 9 square meter in the recent launches. So with Tengah being a new township, it is important that we actually take a step back and look at how similar areas have evolved over time. I think one township that will come to mind is Bidadari. As a new township, especially with the recent $1 million HDB transactions. But I would argue that Bidadari is not the best benchmark because it's still considered a city fringe location. I would think that the better comparison would actually be Punggol, which, like Tengah, started off as a relatively undeveloped Ulu area, but was backed by long-term planning and transformation. And this is important because it helps us set more realistic expectations for how Tengah might evolve over time. In the early days, when Punggol was first introduced, considered extremely ulu. I mean, some people will still consider Punggol ulu nowadays. Limited amenities, weaker connectivity, and most buyers were entering at relatively lower price points. At this stage, demand was mainly driven by affordability, not lifestyle or convenience. The Northeast Line began operations from June 2003 onwards. in order to facilitate this connectivity. And only in late 2015, this is where Waterway Point was completed. Now, we are already seeing the next phase of job creation and economic drivers. So, we are seeing the formalization of Punggol Digital District and the SIT campus. Now, Punggol is actually becoming a live-work-play ecosystem. With 63,000 HDB already built and a total plan of 96,000, we are seeing the creation of the North Shore, where the BTOs there are already MOPing, as well as the BTOs in Punggol Digital District. So how does it translate to Tengah? Tengah already has 11,000 over dwelling units, and we see that Tengah is planned for 42,000 in total. So we are seeing relatively almost half the size. So in terms of Punggol, where does it stand? If we see, Punggol HDBs actually started developing between 2002 to 2011, and about 150 over blocks were TOP'd between that time. And the first few condominiums were a treasure trove. This is a fully fledged condominium, launched in 2011, TOP'd in 2015. And a comparative is Privé. This is an executive condominium, launched in 2011, TOP'd in 2013. In terms of the location, Treasure Trove is actually across from Waterway Point. For Privé, you still need to walk about 7 over minutes to the MRT. So in terms of convenience, I would say that Treasure Trove is better located. And if we look at the entry prices for Treasure Trove against Privé, we see that there's a 32% premium paid from an EC compared to a fully fledged condominium. We will use this data to compare how Tengah Gardens will look in terms of pricing. And in terms of profitability, Treasure Trove, from the last 2 years of transactions, we are seeing annualized returns of about 5% compared to Privé at 7%. One of the reasons is because executive condo, you are buying at a subsidized rates. How much subsidized? This was the entry prices for Privé compared to the outside core region resale and subsale segment. So you are seeing a discount of about 20%. So for people that were buying into Privé, this was about 686 per square foot compared to the OCR resale of 836. Whereas for Treasure Trove, they were paying a premium of about 8% and $900 per square foot to enter into Treasure Trove. And as we fast forward to 2026, we see that the prices of both Treasure Trove and Privé to be around the same pricing, slightly higher than the average per square foot for the outside core region. So the big question is this: will Tengah repeat Punggol's success, or are we looking at a very different trajectory? So let's go back to the Ulu question. Actually, Punggol sits at the northeastern tip of Singapore because it was relatively isolated from other mature towns. The support came from Sengkang, which was also developing. And also beyond that, you're looking at areas like Pasir Ris, all towards the north. The key difference is Tengah is actually situated between Jurong West, Bukit Batok, and Choa Chu Kang. These are 3 mature townships, and Tengah actually will benefit from both the existing support and the future growth. There is also the infrastructure support that will be introduced with the new MRT line, the Jurong Region Line. This line is actually designed to serve the western part of Singapore, connecting areas like Choa Chu Kang, Tengah, Jurong East, Jurong Innovative District, and Nanyang Technological University. So the Jurong line is actually built alongside these growth areas, and we notice that actually Tengah has 4 MRT stations. In comparison, in a mature estate like Tampines, there's actually only 3 MRT stations, which is Tampines West, Tampines, and Tampines East. So Tengah will benefit from this infrastructure support. And as we move and talk about the Jurong Innovation District, this district is actually focused on the advanced manufacturing, robotics, and technology. It will be anchored by Nanyang Technological University to bring the companies together researchers, and talents into a single integrated economy system. Hence, with this introduction, we expect jobs to be created in the area, which will translate to demand for housing. And on top of that, we are expecting schools to come into Tengah, most reputably ACS Primary. And this raises a very, very interesting comparison because back in the 90s, we saw that Raffles Institution and Catholic High being moved to Bishan. And the area also benefit from such good schools in the area. And beyond the local schools, we are also seeing entry of United World College into Tengah, on top of the existing schools like Dulwich College Singapore, which will also attract expatriate families and a different tenant profile altogether. This is significant because from a property standpoint, this will support both own stay demand and rental demand over time, which is actually quite rare for a new township. Tengah has also about 14,000 flats completed, which also means we are seeing resident population forming in the area already. And by the time Tengah Garden Residence TOP, there will be a pool of existing homeowners in the area that have already MOP. So you are looking at potential HDB support in terms of your exit strategy. And if we actually want to cover into the larger Tengah, beyond the infrastructure, schools, and growing residential base, how does it compare with the other executive condos in the area? So we look at it chronologically. Copen Grand was launched in October 2022 with an average per square foot of 1,341. This is about 2 streets away from Tengah Garden Residences. And then subsequently, towards the Bukit Batok side, Lumina Grand EC was launched in January 2024 at an average of 1,514 per square foot. These two projects were non-harmonized. And then, thereafter, Novo Place EC launched in November 2024 and Octo Place EC launched in July 2025. We are seeing the average per square foot crossing $100 from one launch to the other. So at Octo Place, we are seeing the average per square foot to be 1,759 per square foot. And in terms of the mixed development premium, Revel and Pinery both crossed 90% in terms of transactions since its launch day. So I believe it's a very good sample size. We are looking at also a 30% premium between Revel and Pinery. So taking into account what happened in Punggol Treasure Trove versus Prevail of about 30% and another 30% premium in terms of the mixed development premium, let us look at Copen Grand. There were a few units that came out and sold in the last 6 months. We do not compare this unit of 1453 because this is actually a penthouse unit, so the per square foot will always be lower. We compare the recent transactions from 1619 to 1703, so it's about an average of 1660 per square foot. So if we take it back to harmonized of 7%, this is roughly 1776 per square foot. And if we were looking at it at a 20% premium, this is going to be 2,131 per square foot. And if developer decides to have it at 30% premium, this will be 2,308 per square foot. A small little detail that some people do miss out on is that Copen Grand, actually the ceiling height is 2.68 meters compared to Tengah Garden Residences, which is at 2.8 meters. Why this matters is because the higher your ceiling height, when you go in, you do not feel so small or claustrophobic. So it's important as it comes to a resale because Copen Grand just recently TOP, and that would mean that they will start selling or MOP 5 years down the road around 2031, which is also roughly the same time when Tengah Gardens is available for sale. And then in terms of Octo Place was selling at 1,759 per square foot on average, and the recent prices were all crossing 1,009. So if you are looking at about 20 to 30% premium, we believe that the developers for Tengah Garden Residences can afford the 20% to 30% premium. and we will look at it at the price matrix later. So if we look at the land bid prices for Tengah Gardens, it is the lowest for this year. We are looking at $821. The comparison between the three bidders is actually $8 difference, which suggests that the developer had similar views on the value of the site, and given that it's a relatively new area. So if it's 821 in layman terms, if we times 2, it's looking at about 1,650. But if we put on the developer's hat, would they sell it lower than the executive condo which has transacted recently in Coastal Cabana, in Pasir Ris, and in Revel Tampines, which are already transacting or moving at between 1,700 to 1,900 per square foot? And another Woodlands executive condominium site, developers bought in at 794 per square foot. So if we were to equate it, it would sell at least between 1,008 to 2,000 per square foot. So if you put on the developer's hat, would you sell Tengah Garden Residences, a mixed development, to be lower than the expected future executive condos prices? So if we compare to the next new launch project that will be upcoming in the area, the next one will be at Lakeside MRT. This development is near MRT, but it's not a mixed development. Developer bought it at 1,132 per square foot per plot ratio. So if we expect it to sell about 2,003, average at 2,005, and hit 2007, would developers for Tengah Garden Residences sell cheap? And given the recent news of the Dover site, selling at 1,556 per square foot per plot ratio, this is at the city fringe. However, we are seeing trends of outside core region land prices hitting 1,003. RCI have hit new benchmark of 1,005. So we can see that the upcoming prices will not be cheaper. And for this developer, you're looking at about $3,000 per square foot. So if we were to look at Tengah Garden Residences, we expect her to sell between 2001 to 2003, averaging at 2002 per square foot. I believe developers may attract buyers by pricing some units from 20XX as a guide price. And if you are looking at those pricings, you're looking at one bidders looking at 1.1, two bidders for 1.3, three bidders at 1.7 to 1.8, and four bidders from 2.5 million onwards. So what we are seeing is developers is crunching sizes that are acceptable and trying to give you at comfortable quantum. And these will aid their sales. I believe, based on the trending of the new launches, this will be a pretty good project that sells. It is a strong buy because it is already supported by the existing HDB base and nearby executive condominiums, which creates immediate and future upgrader demand. Second, upcoming EC land bids are already coming in higher, which sets a rising benchmark for future pricing. Third, even the closest new launch at Lakeside government land sale cleared at a higher land rate, which reinforces the pricing support in the region. And finally, you are looking at a combination of the Jurong Innovation District, schools, and the infrastructure all coming together in one area. And Tengah Garden Residences gives you multiple exit points from TOP to the completion of Tengah as a township. So if you are considering Tengah and you want to understand whether this fits your situation, be it timeline, finances, and any alternatives available in the market, feel free to reach out to us. Happy to walk you through it with no obligations. And if you found this useful, do like, share, and subscribe, as I'll be sharing more breakdowns like this in the future. Bye!